Hey guys, I'm Fatima and I'm here to explain the Statement of Comprehensive Income. Statement of Comprehensive Income, also known as income statement, reports the results of operations of the business for one accounting period or for the period.
Hi, I'm Paul. I'm the one who will explain the first element, which is the income. Income refers to the transactions from operations of the business that increases the assets, decreases the liabilities, and increases the equity. It has a normal balance of credit. Take note, contributions from the owner are not considered as income.
Hi, I'm Giselle. So what is the revenue? Revenue is the income generated from the primary operations of the business. Here are the examples. First is service income, which is revenue derived from rendering of service and recognized when the service is already rendered. Second is sales, which is derived from selling of the goods and recognized when goods are already delivered. Contra sales accounts are as follows. Sales return and allowances reports the selling price of returned goods by customer. Sales discount reports the amount of discount taken by customer.
Hi, I'm Joseph. This time, let's define gains. Gains are income derived from other activities of the business. It is reported after the operating section in Statement of Comprehensive Income. Examples are interest income from investment of excess cash and gain on sale of property and equipment.
Hello, I'm Chanel. I am the one who will explain the second element, the expense. Expense refers to transactions from operations of the business that decreases the assets, increases the liabilities, and decreases equity. It has a normal balance of debit. Take note, drawings of owners are not considered as expense.
Hello, I'm Sid. So first, what is expense? Expenses are incurred in doing the primary operations of the business. There are three approaches to recognizing expense. First is the matching principle, which says that expenses should be recorded in the same period in which their related revenue is recorded. Second is the rational allocation, which says that expense is allocated over period of expected usage. And the third one is outright recognition, which says that expense is recognized outright when incurred.
Hello, I'm May. Let's see the different examples of expense. Here are the examples. Cost of goods sold or cost of sales, which refers to the cost of inventory sold, which comprises the purchase price and freight and or shipment cost. There are two ways of inventory accounting. First is the perpetual inventory system, wherein the inventory account is updated every time there is purchase or sale, and the cost of sales is updated every time there is a sale. Second is the periodic inventory system, which is only updated at end of year or end of month.
Hi, I am Rubilin. I'm here to tell you the other examples of expenses. Another example is operating expenses, which refers to all other expenses related to the operation of the business other than the cost of sales, such as salaries expenses, utilities expense, transportation expense, depreciation, amortization, and bad debts expense, or the estimated amount of loss resulting from uncollectible accounts receivable. Another kind of expense is losses which are incurred for other activities of the business. It is reported after the operating section in the Statement of Comprehensive Income. Example are interest expense from borrowing and loss on sales of property and equipment.
Hey there, I'm Nikki. I'm going to explain the first format of statement of comprehensive income. The single-step statement of comprehensive income groups all revenues together and all expenses together. The net income is computed by total revenues less total expenses. Expenses are listed based on source or nature of expense. Take note, increase in inventory is equal to ending inventory minus beginning inventory. An adjustment to convert net purchases to cost of sales as not all purchases for the year was sold. Deducting all purchases will overstate the expenses. Here is an example.
Hey there, I'm Ethan. I'm here to explain you the second format of the Statement of Comprehensive Income, which is the multi-step SCI or Statement of Comprehensive Income. In the multi-step SCI, revenues and expenses are classified and presented on the following sections: gross profit, operating section, and non-operating section. Subtotals are presented at the end of each section, namely gross profit, operating income, and net income. Expenses are listed based on usage or function of expense. Operating expense are categorized into cost of sales, general and administrative expenses, and selling expenses. Here is an example.